Hey everybody, I've got a bit of a two for one here today to wrap up this week here on Friday and also start off the month of November. And that has to do with tech stocks. One side of it is the actual interesting underperformance in some way, which I'll explain, and then the sort of gap and snap with Microsoft. So let's have a look at these two things and see what this might mean going forward. Two lines. You see the SMH, or the semiconductors ETF, up at the top. And what I think a lot of people are potentially overlooking, and it'll matter in hindsight, of course, that's always the way it works, but I do think we are in the process of putting in a lower high for the time being. I'm not bearish semiconductors can sort of fundamentally through a longer term lens. I think there's a great story, continues to be a great story, but it's possible that we put in an immediate term high, which is enough to wash most people out, by the way, right? And that's the timing question that we always come to. At the same time, if you look at that bottom chart, this is the equally weighted S&P 500, the RSP ETF, and you can see, even though it's certainly come off the highs, it did make a fresh all-time high in middle of this past month, October, whereas that's exactly where semiconductors made so far a lower high. Now, where people get hung up on this, and it's understandable, is with this chart. And they look at the year-to-date performance and they say, well, Serge, equal weighted S&P is up 13% and these semiconductors are up 38%, call it 40%. What are you talking about? Certainly true, but that is hindsight as well, right? So just because they did outperform year to date doesn't mean it's going to have to outperform going forward. In fact, this fits into our longer term sort of higher inflation for longer theme. Oh, I should move this thing here. Which is that we have a good chance of seeing tech stocks, not every single tech stock, but a lot of them actually underperform other things, right? Like potentially energy stocks over the next 5 to 10 years. And that's something that we know for a fact, for the most part, people are absolutely not positioned in. Last or second part here is Microsoft. And this goes a little bit into that same direction, or maybe very much so now. Microsoft, of course, is not a semiconductor stock, but it trades in line with this AI theme, which, of course, is what semiconductors is all about. Now, here's where it gets a bit subjective, and this is where we draw lines. And again, these lines sometimes can be a little bit subjective, although they should kind of fit the same narrative. So I think what's interesting here, too, you're seeing Microsoft not being able to get out of its own way, and that's being reflected with a lower high, a clear lower high in mid-September, and once again, essentially earlier this week. Now, the way the company or the stock reacted to the earnings report on Wednesday after the close, so yesterday, Thursday was the market reaction, is that the stock essentially gapped down, and continued to go down through the rest of the day, closed at the absolute lows of the day, and was down 6% on a day, snapping, or at least marginally snapping some support. Now, if I wanted to be, really creative and fit this narrative, what I would do is I would sort of fit this line like something like this, right? And that would show an even clearer sort of break of that if you look at this now, support. But I think we also have to respect the support line that goes back a bit further, potentially even further than that, like this, and this one too is marginally breaking. So I think almost any way we draw this, we're seeing a marginal break. Now, I'm not sure because we still have a lot of animal spirits, I'm not sure I'd want to be outright short Microsoft, particularly because I think we still have secular tailwinds. But I think this is an opportunity where if one is crafty enough with options, one could put on what we refer to as an option spirit call spread, where the bet isn't so much that the stock's going to fall apart from here, but more that it might be limited on the upside. Meaning that I could make a bet of something like, I think the stock was down 6% yesterday on Thursday, so maybe it's not going to go back, let's say, up there, right? In other words, the stock could go down, we make money. It could go sideways and make money. And it could go higher up to a degree, to a certain point, and we could still make money, which gives us a much higher probability of a profitable trade. Hope it helps, and we'll see you again soon.